Hi traders, welcome to this week's pre-weekly market review of December 21st. It's going to be a light week this week. Obviously, we've got the holidays coming up, so we're not going to get into too much detail about this week's trading, but we are going to start preparing you for future markets to come. Just a quick recap. Basically, what's going on in the market is everyone's very focused on this Russian crisis at the moment, the probability of them slumping into a major recession. That comes hand in hand with the falling oil prices, okay? And so the only way they can try and perhaps start to combat that is if they basically reduce production of oil and hope that that will boost demand, but that could have a knock-on effect, especially in the Eurozone. And in general, there are fears that contagion may start to creep in again in the Eurozone, which is connected to the trade relations between the economies. Obviously, people are having to keep a close eye now on this Russian ruble, the oil prices, and the effect on the euro currency, less the US currency at the moment. And that's why we did see the stock market flying high last week, okay, even though it was sort of in the midst of a rebound to the downside. All those bets are off for now as we come towards the close of the year. And last but not least, despite Japanese safe haven trades taking place, people have actually started to revamp their positions going short on the yen, and that's following news that came out from the Central Bank of Japan last week that they're very much committed to the stimulus program that they have adopted so aggressively, especially over the last 2 years. Without further ado, guys, let's look at some of these trades. So here you have the US S&P 500. We saw a while ago that this pair is following a megaphone pattern, okay, so higher highs and lower lows. But recently, the breakout of this resistance line, that's the upper red line I've just drawn now, was actually retested, and we saw the market falling back into the megaphone, only to be rather disappointingly broken again last week. So retesting previous highs just beyond the 2000 level plus and approaching obviously 2081. If we see those levels broken, then you can just carry on buying this pair for the next few months as far as I see it, certainly until March. And in March, April is when we get the feeling from the Fed that they're going to start to really seriously begin the rate hikes procedure. So there is that possibility for now, and that has a knock-on effect on the strength of the dollar. And we're looking here at the daily US dollar against the Japanese yen. Having already spoken about the yen's commitment to stimulus, we saw the beginning of a retracement here where the yen was being the safe haven trade and moving down this megaphone, but for now it's starting to creep up again to 121, and so unless we see 121.75 broken, there is still a chance of it retracing down to 109. Finally, guys, we look at the dollar yen on a monthly chart here. You can see that the overall resistance, and that's pre-2007 levels, is just around 123.33. So if anything, that would also give a major signal for pullbacks there, just as far as support resistance levels goes. And when a resistance is tested, there are obviously a lot of counter trades that tend to meet that initial price. We've now moved on to the euro dollar, guys. We're looking at a monthly chart because we feel that the weekly and the daily chart don't have much to offer at the moment, okay? It's been a bearish trend all the way for the euro dollar, obviously, this year. You can see here month after month selling and selling. The tops are showing us lower highs, and this is an asymmetric triangle pattern, so you can Google away on those patterns. And the support levels now, we're retesting 2008 and 2012 supports. If this level gets broken beyond 123, 122, we're obviously going to retest lows right in the middle, which you can see of 2010. I think, and so does the team here, think that the likelihood of a reversal at this point is very probable, and we can see a major spike forming on a cross or exotic euro pair, which is not against the dollar but now against the Swedish currency. Okay, so you can see here the euro sec, okay, is showing you that there is obviously a very weak Swedish pair there, and the dollar, the euro has been considerably stronger against that pair. And recently we had a very, very big spike on this weekly chart that I've shown you, which used to be a resistance level. If that resistance is honoured and the market starts to rebound down back into this level playing field and below the resistance line, then we can expect to see a strengthening Swedish currency and a further weakening euro, which may indicate the possible reversal trend on the euro-dollar pairs, interestingly enough, because they've moved kind of in opposite directions. Okay, remember, there are elections coming out March, April of 2015 in Sweden, and that's also going to be huge for the currency. So when you see here on a weekly chart, even in 2010, we have had situations of those major spikes that I've shown you on the left, and actually nothing's come of them, and the market hasn't reversed, and it's actually continued to go in the same direction. So until we see this pair, confirm that it's creeping back below 9.37 levels and into the pre-resistance range, there is no point getting too excited about that short position. Alright guys, it is obviously holiday week, so there is very little data coming out and the trading volumes will be very thin, so I wouldn't go in too heavy on any particular trades right now, but start preparing yourself, because we can expect the first quarter of 2015 to be very, very interesting, and we're either going to be on long dollar or short dollar. It is as simple as that, and it's just a question of backing the right side. So this week, if anything, we've got unemployment claims coming out in the US and final GDP. So on Tuesday and Wednesday. And Thursday, the Bank of Japan are speaking again, so that would be interesting to follow up on the dollar yen. Other than that, we want to wish you a very, very jolly season's greetings. Okay, enjoy your time off. Don't be too stressed about the market. Let it breathe for a few days, and we'll see you back again, probably more than likely in 2015.